On March 18, 2026, an email landed in the inbox of everyone still living inside Mark Zuckerberg's metaverse. It was short. Your world is being deleted. On June 15, the app would stop working on your headset. Whatever you had built in there. The house, the club, the little corner of a universe that cost more money than almost any product in the history of the internet. It would simply be switched off. And then, 48 hours later, Meta took it back. The chief technology officer went on Instagram stories and said the company had changed its mind. Horizon worlds would stay in virtual reality, he said, for the foreseeable future. Fans had reached out. That was the reason. Think about what that sentence actually means. A company worth more than $1 trillion announced the death of its flagship product, and then unannounced it 2 days later, because a few hundred people asked them not to. Not because it was profitable. Not because it was growing. Because somebody would miss it. That is what $83 billion bought. $83 billion. That is the total operating loss of Meta's Reality Labs division since the company started reporting the number. It is almost 4 times what Meta paid for Instagram, WhatsApp and Oculus put together. It is more than 3 years of NASA's entire budget. And it was spent building a place where most of the worlds ever created were never visited by more than 50 people. Ever. This is not a story about a product that failed. Products fail every single day. This is a story about a man who changed the name of one of the most valuable companies on earth to match a world that did not exist yet, and then kept paying for it, every quarter, for 5 straight years, while the losses got bigger and the audience got smaller, and not one person alive had the power to make him stop. Stay with me. Because the strangest part of this story is not that the metaverse died. It is that the money never did. And the one thing that finally worked had no metaverse in it at all. To understand how $83 billion disappears, you have to go back to a stage in October 2021. Facebook Connect. Zuckerberg walks out. Or rather, a rendered version of him does, into a rendered living room, and tells the world that the internet is about to change shape. His words were these. The next platform and medium will be even more immersive. An embodied internet where you are in the experience, not just looking at it. And we call this the metaverse. Then he did something that almost nobody in corporate history does. He changed the name of the company. Not a product line. Not a division. The name. Facebook, one of the most recognized brands ever built, 17 years old, with close to 3 billion users. It became Meta. 8 months later the ticker symbol on the Nasdaq followed it. FB became META. The timing was not lost on anyone. 3 weeks earlier, a former employee named Frances Haugen had sat in front of the United States Senate with tens of thousands of internal documents, describing a company that knew exactly how much damage its products were doing. Critics said the rebrand was a change of subject. Zuckerberg said it was a change of destination. And here is the part that matters more than any of it. He could do it alone. Meta has 2 classes of stock. Class A gets 1 vote. Class B gets 10. Zuckerberg owns almost all of the Class B shares. Which means he holds around 13% of the company, and roughly 61% of the votes. He picks the board. The board cannot fire him. There is no activist investor, no coalition of pension funds, no boardroom coup on earth that can reach him. Every disaster you are about to hear happened inside a company where exactly one person had to be convinced. And that person was the one having the vision. He was not gambling with his own money. He was gambling with everybody else's. And he had made sure, years earlier, that nobody could ever take the chips off the table. So what did $83 billion actually buy? Start with the hardware, because that part was real. Meta bought Oculus in 2014 for $2 billion and turned it into the largest virtual reality operation on Earth. The Quest headsets. Thousands of engineers. Custom silicon. Optics laboratories. Factories. A supply chain built out of nothing. Then came the software. An entire operating system. An app store. A payments layer. And the flagship. A social world called Horizon Worlds, which opened to the public in December 2021. The pitch was simple and enormous. You would put on a headset, and you would be somewhere. You would work there. Meet friends there. Buy things there. Meta would not just be a company on the internet. Meta would be the ground the internet stood on. Every app store takes 30%. Zuckerberg had spent a decade watching Apple and Google take that 30% out of his business, and set the rules he had to follow. This time, he would own the platform. That is the actual business logic sitting underneath the goofy avatars. It was never really about virtual reality. It was about never having to ask permission again. And the spending followed the size of that ambition. In 2020, the first year Meta broke out Reality Labs as its own line in the accounts, the division lost $6 billion. The next year, $10 billion. The year after that, $13 billion. Be clear about what those numbers are. That is not investment sitting on a balance sheet. That is operating loss. Money in, product out, and the product bringing back a fraction of what it cost. Meanwhile, the thing all that money was building was quietly becoming the most mocked object in technology. Because when you put on the headset and arrived inside Horizon Worlds, the avatar you met, the avatar that was supposed to be the future of human connection, had no legs. The legs became the joke. But the numbers were the real story. In February 2022, Meta told the public that Horizon Worlds had 300,000 monthly users. It sounded tiny for a company with 3 billion. But it was a start. A seed. 8 months later, the Wall Street Journal got hold of the internal documents. The real number was 200,000. It had not grown. It had shrunk. The flagship destination of the most expensive bet in modern corporate history had lost a third of its population in 8 months. The internal target, 500,000 users by the end of the year, had been quietly cut almost in half, down to 280,000. And of all the worlds that users had built inside it, most had never been visited by more than 50 people. Ever. Then came the memo. Vishal Shah was Meta's vice president of Metaverse. In the autumn of 2022, he wrote to his own organization, and the words leaked. Everyone in this organization, he wrote, should make it their mission to fall in love with Horizon Worlds. You cannot do that without using it. Read that again. The vice president in charge of the Metaverse had to instruct the people building the Metaverse to go and use the Metaverse. He also wrote that the aggregate weight of paper cuts, stability issues, and bugs was making it too hard for the community to experience the magic of Horizon. And he ordered what he called a quality lockdown. 2 months before that memo, Zuckerberg had posted a photograph. A selfie. His avatar, standing in front of the Eiffel Tower and the Sagrada Familia, inside the world he was spending billions on. Kotaku called it soulless. Forbes called it dead-eyed. It looked, people said, like a video game from 2005. Within days he promised major updates. And at the next Connect, he walked onto a virtual stage to unveil avatar legs, while an audience of legless avatars applauded him. It was later confirmed that the legs in that demonstration were motion capture. Not the product. A performance of the thing, standing in for the thing. While Zuckerberg was defending the vision, the market was pricing it. February 3, 2022. Meta reports earnings. Daily users had fallen for the first time in the company's entire history. The forecast was weak. And Zuckerberg had just told investors that the metaverse alone had cost $10 billion in a single year. The stock fell 26% in one day. $232 billion of value, erased between one closing bell and the next. It was the largest single-day loss in the history of the American stock market. The previous record, held by Apple at $182 billion, had stood for less than 18 months. Meta beat it by $50 billion. That was February. It kept going. By November 4, 2022, a single share of Meta cost $88. 13 months earlier it had been over $370. Roughly 3/4 of the company's value, gone. And this is where the people show up. Because when a stock does that, somebody pays. On the 24th of October, an investor named Brad Gerstner published an open letter to Zuckerberg and the board. He called it time to get fit. Cut 20% of the payroll, he wrote, and cap the metaverse at $5 billion a year. He described the spending as disproportionate and appalling, even by Silicon Valley standards. 16 days later, Meta laid off 11,000 people. 4 months after that, another 10,000. 21,000 jobs, at a company that had never had a mass layoff in its entire existence. Zuckerberg called it the year of efficiency. Investors cheered. The stock recovered, spectacularly, and the story became a comeback. But look closely at what was cut, and what was not. 21,000 people lost their jobs. The metaverse budget went up. That is the part people still get wrong about this story. Everyone assumes that after the crash, after the letter, after the layoffs, Meta pulled back. The market had spoken. The users had voted with their headsets. The joke had been told 1,000,000 times on the internet. Here is what actually happened to Reality Labs after everybody said stop. 2023. $16 billion lost. 2024. $17 billion lost. 2025. $19 billion. The worst single year of the entire program. 3 full years after the world had already decided the metaverse was dead. Every year, the losses got bigger. Not smaller. Bigger. Straight through the crash, straight through the layoffs, straight through the mockery. Now go back to that 61%. This is what a controlling stake actually looks like in practice. It is not a governance footnote buried in a proxy filing. It is the reason a bet can survive every single piece of evidence against it. There was no mechanism, none, by which reality could reach the person making the decision. Companies are supposed to have brakes. A board that can say no. Shareholders who can vote you out. A market that starves a bad idea of capital until it dies. On paper, Meta had all three. In practice it had one man, one vision, and the votes to keep signing the check. So the spending never stopped. But something else did. And almost nobody noticed the moment it happened. The word stopped. Somewhere around 2023, if you sat through Meta's earnings calls, you could hear it happening in real time. The word metaverse got quieter, and quieter. And a different word got louder, until it was the only thing anybody at that company talked about. Artificial intelligence. The money kept flowing into Reality Labs. The story simply stopped being told about it. Zuckerberg had not cancelled the metaverse. He had stopped saying its name. And then he did something that made the new priority impossible to miss. In June 2025, Meta paid just over $14 billion for 49% of a company called Scale AI. It was not really the purchase of a business. It was the purchase of a person. Alexander Wang, 28 years old, who became Meta's first chief artificial intelligence officer, and took over a brand new division called Meta Superintelligence Labs. Zuckerberg physically moved his own desk to sit beside him. $14 billion, for one hire and a data business. Meanwhile, the Metaverse division was still losing $4 to $6 billion every quarter, in almost complete silence. Then 2026 arrived, and the demolition started for real. January the 13th. Around 1,500 people cut from Reality Labs. Roughly a tenth of the entire extended reality division. 3 game studios closed outright. Armature. Twisted Pixel. Sanzaru. Supernatural, the fitness app Meta had bought for $400 million, was moved into what the company called maintenance mode. The virtual meeting rooms product was retired. Outside headset partners were paused. And on March the 18th came that email. Horizon Worlds. The world at the center of all of it. Off the store by the end of the month. Off your headset by June. Alive only as an app on the very phone it had been invented to replace. 48 hours later, the reversal. It stays, said the chief technology officer, for the foreseeable future. But read the small print on that rescue. Meta is not making new virtual reality content for it. No new investment. No new worlds. No roadmap. They simply agreed not to switch the lights off. That is not a rescue. That is a life support machine, with nobody willing to sign the form. So let us close the ledger. In the first 3 months of 2026, Reality Labs brought in $402 million, and lost $4 billion. For every dollar that division earned, it burned about 10 more. $83 billion, and still counting. And here is the ending that nobody scripted. There is one product out of all of this that genuinely worked. It sells in enormous numbers. People love it. It is arguably the most successful piece of artificial intelligence hardware anybody has ever shipped. And it is a pair of Ray-Ban sunglasses. No headset. No virtual world. No avatar. No legs. Just a camera, a speaker, and an assistant that answers when you talk to it. In 2025 alone, more than 7 million of them were sold. More in 1 year than in the previous 2 years put together. The company is aiming for 10 million a year. $83 billion was spent searching for the future inside a place that did not exist. The future turned out to be sitting on somebody's face, manufactured by an Italian eyewear company, with none of the metaverse in it at all. The world that Zuckerberg built is still there tonight. You can put on a headset and walk into it. Most of it is empty. The lights are on because a few people asked nicely, not because anybody is coming. And the company that spent $83 billion chasing it is still called Meta. Named, permanently, after a place that almost nobody goes. Which leaves one question, and I genuinely want your answer down in the comments. If one person controls the votes, and the votes control the money, is that visionary leadership? Or is it just a very expensive way of never being told no? If this is the kind of story you want more of, subscribe. There is another one waiting for you right now. I will see you in the next one.